Thank you very much for the kind introduction. Ladies and gentlemen, as you will have noticed, I've been asked to step in because unfortunately Luma was not, couldn't make it at the last minute. But I think that, I'm very pleased to be here because I think we're talking about what is one of the most significant areas of Islamic finance, which is the regulatory development and the regulatory infrastructure. And I think that any market that has gone through the implementation of Islamic finance understands that the regulatory framework really is the crux on which the industry is built, right? And you have so many different considerations to take into account. You have the legal and legislative framework to consider. Obviously, as regulators, you have a duty to protect the rights of the consumers and the retail individuals. You have Sharia considerations, and different markets have different norms and different understandings of what is acceptable. So it is a very, very interesting area to look at, which forms the basis of the development of Islamic finance in the respective markets. And today we're very privileged to have, three representatives from three very different markets, right? When we talk about Islamic finance, Malaysia obviously is one of the most advanced Islamic finance markets in the world, but they have their own regulatory considerations. We're going through a period of macroeconomic uncertainty, policy divergences in different markets, so they have to plan for the future on how to take the industry to the next level. When we talk about markets like the Philippines, recently with the issuance of their Sukuk instrument, with the rolling out of Islamic banks in the market, a new market that's entering the fray in a region with a significantly developed Islamic finance ecosystem. So how does Philippines play into that? And how do you serve the needs of the local consumers while increasing trade activity with the international markets around you? And obviously in Italy, one of, a very well-developed regulatory market from a conventional finance perspective, but new to the Islamic finance space. And how do you bring that in and develop that and play a role within Europe? So I think we'll get some very, very interesting perspective and insights on this. And maybe what I'll do is I'll start with Nurul Issa and talk about, how significant has the regulatory framework been in the success of Islamic finance in Malaysia? And when you look forward, what are the areas of focus that you're looking at to continue to promote and enable that growth going forward?
Thank you, Mustafa. Assalamu alaikum. A very good morning and thanks for having me here. So for Malaysia, I think we've had 4 decades of our journey in developing the Islamic finance ecosystem. One of our primary objectives of codifying the dual financial system in Malaysia is fundamentally to provide the market certainty for long-term strategy development. I think we took that decision in 2009 to not just do it as a national strategy, but to actually reflect it in the central banking law, and that provides the concrete foundation for decades to come. So this is a long-term plan for us. And how that has contributed to developing that market certainty is it allows us to pace our regulatory approach. It allows us to focus on building blocks from inclusion when we first started in the 1980s, to market development in the 1990s, to diversifying and internationalizing in the early 20s. And now we're looking at positioning ourselves as an international gateway for Asia and GCC. The market is no longer small, and I think with that it comes with unique considerations of regulating market at scale. So Islamic banking in Malaysia, total financing that is Sharia compliant is already reaching 46%. On the liability side, is around 42 and a bit. Our equity market, more than 80% is actually already Sharia compliant. And when we look at the Sukuk market, we're one of the largest Sukuk market. So having been in this journey for more than a decade, what I've realized is from a regulatory perspective, making sure that as regulators, we're striking that intricate but interesting balance between development and risk consideration has been central to enabling us to support market development whilst making sure that the growth will be lasting. So our approach has been to ensure that we focus on stability, but at the same time, the developmental aspects is done through engaging the players when it comes to market priorities. When we roll out our financial sector blueprints, we've had 3 iterations of our financial sector development master plan. In our latest iteration, we've got 3 priorities. The first one is to internationalize the market. The second is to actually mainstream social finance, and we've been experimenting quite a bit in terms of blended structure. I'll share in a little bit how that has gone. And thirdly, to ensure that Islamic finance really delivers on its promise from a fundamental values of Sharia. And that is essentially through anchoring our development strategy with value-based intermediation, which is an initiative that we've rolled out back in 2017 before the Green Movement becomes what you see here today. So I think for Malaysia, making sure that we learn through the process, regulating innovation, but at the same time being risk responsive to the profile of the unique features of Islamic finance has been our approach to market development. I'm just going to pause there.
That's very interesting, and I like that focus: internationalization, social, and Sharia. Social finance obviously has been an area that has been a challenge for Islamic finance, and some criticism that we see that Islamic finance hasn't done enough to leverage the social capital that is there and to utilize that. What specifically do you think is missing for us to be able to mobilize that capital, and what can we do from a regulatory perspective to enable banks to tap into that capital and to effectively utilize it for having an impact on the society that they operate in?
What I observe is when it comes to tackling social impact, oftentimes the sector looks at it in isolation of the other components that builds the ecosystem. So I take an example of our blended finance experimentation, but now it has actually scaled up in 2020 at the peak of COVID. What we realized overnight is there were lots of people who suddenly lost their jobs. These are airline industry, manufacturing companies who were not able to operate in a closed market environment. So recognizing that, if we were to just look at it at traditional banking instruments to provide loans for startups, they can't generate income at that point in time. Traditional finance instrument may not be always well suited to deliver on the social outcomes that you want to achieve. So back in 2020, we then piloted a blended structure, which has a combination of philanthropic capital, microfinancing, because the repayment behavior remains interesting. If you give free money, that doesn't create the incentive nor the financial behavior that would be necessary to ensure that it would last. And the third part is structured mentoring. Recognizing also that Islamic banks is not really able to reach all parts of the society. Branch networks are limited. Digitalization has its constraint. Having implementation partners, partnering in particular with the third sector, with the NGOs who are actually on the ground, has enabled this particular program to deliver on not just the financing component, but actually building that social mobility. We've seen companies that are part of this program. So it started with just 2 banks. Now it has expanded to 11 banks. It started with just less than 100 first-time micro-entrepreneurs. Now we have about 8,000 under the program, looking at sustaining business resilience, so revenue growth, looking at retaining employment and employing more people, looking at digital upscaling, so not just selling what they used to do, which is by the roadside, but digital marketing, having that access, and thirdly, building their social resilience, looking at how much they're able to save, how much they're able to actually provide for their lives and livelihood, and working with the entire ecosystem partners to actually track this data at a granular level from day one. And having that long series data now after 5 years, we're seeing the benefits of taking a cross-sectoral approach to market development, making sure that we take an ecosystem approach in developing solutions to problem statements that have remained persistent. So I think for Malaysia, we're very conscious of the fact that we want the Islamic finance to not just say that they do good, but to actually deliver on that promise.
And be able to demonstrate that delivery as well.
For sure.
No, I think it's, we always look to Malaysia as a guidance for the rest of the industry in many of these areas. And as you mentioned, initiatives like VBI and blended finance are all areas that many markets can benefit from. I want to turn the conversation now to Arifa. And, obviously completely different from the Malaysian experience. You are a new market when it comes to Islamic finance. You recently, launched Islamic banking services, the Sukuk issuance, and you operate in a region that has, much more developed markets who have been operating for a much longer time, the likes of Malaysia, Indonesia, Brunei, each one having their own unique flavor. So it's not a homogeneous, regulatory framework. Can you talk to us about what has been Philippines' experience in launching Islamic finance, setting up the framework for Islamic finance, and going forward, where do you see the area of focus needs to be to really help spur this, emerging market?
Yeah, Mustafa, the story of the Philippine Islamic banking is quite unique in that actually the Philippines is one of the oldest Islamic banks in the world. We have the Al-Amana Islamic Investment Bank of the Philippines, which was established way back in 1973, which is 5 decades ago. But due to a number of constraints like lack of a regulatory framework, because in the general banking law of the Philippines, Islamic Bank was specifically just limited to Al-Amana Islamic Bank. So effectively, we cannot allow other players to enter the Philippine financial system. Until in 2019, it was a milestone when the Islamic banking law was enacted, and that law has practically opened the Philippine financial system to other Islamic banking players. And since then, the Central Bank of the Philippines has been leading an Islamic Finance Coordination Forum comprising of different regulatory agencies and institutions with an aim to establish an Islamic finance ecosystem that can viably operate alongside the conventional banking system. We understand that if we want to establish an effective and viable Islamic finance ecosystem, the different components, namely Islamic banking, Islamic capital market, and Islamic insurance have to be developed. And so we had to create this coordination forum to ensure that these different regulatory agencies are working on the implementing regulations. So shortly after the enactment of the law in December 2019, the central bank has issued the licensing framework to announce to the public the requirements of the central bank in terms of licensing Islamic banking windows. And the central bank has adopted a very flexible approach. We allow both full-fledged Islamic banking windows. It can also be domestic bank or foreign banks. And it is timely because we have also liberalized the ownership of foreign banks in the Philippines. Now, alongside this development, it is complemented by the implementing regulations of, for example, Insurance Commission. They have issued the Takaful guidelines, which actually led to the issuance of Takaful operators license to two players, namely PruLife UK, and the other one is Itika, which is the Islamic banking arm of Maybank Philippines. Now, on the side of this Islamic banking, because of the implementing regulations that were quickly issued by the central bank, we have licensed two more Islamic banking window licenses in the Philippines. One is Card Bank, which is a conventional bank. It's a large conventional bank, and the other one is Maybank Philippines. Maybank Philippines is actually a domestic corporation, but it's a fully owned subsidiary of Maybank Malaysia. Now, aside from that, you mentioned about the sukuk, and that's a very strong signal of the Philippine government of that the serious effort of the Philippine government to promote Islamic banking. In December 2023, we have issued our first sovereign sukuk, and it was oversubscribed by almost 5 times. And this was listed in the Dubai Nasdaq. That is very promising, and actually stakeholders are actually asking when are we going to issue the next sukuk. Now, to complement all of these milestones, the government has also established a Sharia Supervisory Board. The main responsibility of the board is to issue opinions on Sharia compliance matters. This is very important. As we gather more players in the system, we would need an institution that can provide guidance to the players on what is Sharia compliant and not Sharia compliant. Now, we understand that we need to move on with capacity building to support all of these initiatives. Moving forward, the Philippine government would target to have more players in the system, because then we would be able to backtest the regulations that different regulatory agencies have been issuing. If there are regulatory gaps, we can address. And of course, the persistent question that we get from stakeholders is there is demand for Islamic banking in the Philippines. And because of that persistent question, the Asian Development has commissioned a report entitled Unlocking the Potential of Islamic Finance in the Philippines. And this is publicly available in the website of the Asian Development Bank and the Bangko Sentral ng Pilipinas. That report shows a compelling case of an untapped demand for Islamic finance, both from the Muslim population of the Philippines, which is about 10% of the population, also from non-Muslim Filipinos. So that's why the government agency, the way that we are communicating to the stakeholders, is that Islamic finance is not exclusive to Muslims. It's for all Filipinos. And we hope to see more players in the future as we continue to drive with this initiative of financial inclusion, because we have linked this to financial inclusion. We hope to see more players in the Philippine financial system.
No, that is fantastic, and I do stand corrected on the history of Islamic finance in the Philippines. But it's very heartening to see so many different institutions launching windows or playing a role there. And I can talk to you from experience with institutional players that when the Philippines launched their sukuk, it was very well received by the market, as you mentioned, 5 times oversubscribed, and there is a lot of interest for further issuances from that. So we hopefully look forward to welcoming more instruments into the market from the Philippines. Angela, I want to turn to you now, and from Bank Italia's perspective, right? How do you view Islamic finance as a priority area and an area of focus for the bank, and what is the bank's plans or intentions for Islamic finance in Italy?
Okay. Good morning, everybody, and thank you for accepting this very last-minute request of moderating. I will start saying that in Italy we have no Islamic financial institutions, but we have a lot of interest in academia, researchers, and also market players. So what have we done as the Italian central bank is start asking what does it mean for us as a central banker, as a monetary policy, from a monetary policy point of view, having Islamic financial institutions. And so what I can share is what we did with our publication. We issued an occasional paper on this, and we also hosted some events in order to raise awareness on Islamic finance. We also hosted an Islamic Financial Services Board European Forum in the Italian Central Bank, and also participated in an exercise at the European central level. So we issued a paper on Islamic finance in Europe. What are, in our view, the challenges? Because to us, Islamic finance, it's something that we approach from 2 points of view. I will say, first one, the main message is Europe. Italy is embedded in a European framework. In Italy, in Europe, we share a common monetary and financial sector framework. So this means that if you want to operate in Italy, you have to take into account this more general framework. And the second message is a secular approach. Being a European regulator, to us is very important to take a neutral stance regard to the ethical and religious aspect of banking and financial activity. So these are two main messages, but this does not mean that there is not a compatibility between European regulatory framework and Islamic finance. And then I come to challenges. So I like to call it challenges because there is something that we can solve. We can find a solution also based on other legislation and other regulatory authority experiences. And I will focus on 3 main areas. So one is the monetary policy. As you know, the European monetary policy instruments are all interest-based. So Islamic financial institution in the European framework cannot access monetary policy operation, and also sukuk are not eligible collaterals for counterparts in monetary policy operation. The main other areas is supervisory area, and here the challenges are related to access. I mean, there is an issue whether Islamic banking activity is compliant with the notion of banking activity set out in our Italian banking law. So this is the main step we have together with market player to face. And the other one is that in our system, it is mandatory to have a license, to get a license, a banking license, to be part of a depositor guarantee scheme. But we've seen that in UK and in other jurisdictions, solutions have been found. And then there are the usual issues related to corporate governance and the role of Sharia supervisory board in our commercial and civil law. Other issue relates, I will not go in deep, to prudential supervision. I mean, how we take into account the very peculiar risks of Islamic financial institutions. But in my opinion, there is a third area that it's the biggest challenge. And then the first step to take into account if you want to create a level playing field, that is tax regulations. I mean, it has to be equally equally convenient to use Islamic contract and conventional one. And we've seen that in UK, in Ireland, in Luxembourg, in other European jurisdictions where Islamic finance has been developed, we have had this tax amendment to regulations. In Italy, we had a draft law a few years ago, so this is a good news. We're trying to avoid this double duty stamp for especially mortgage operation, but also to have the same taxation for equity and debt. But it was only a draft law. I can conclude my first round of speech with an interesting development on the Islamic finance in Italy that is also related to this country. We had our Italian Export Credit Agency, that is SACE, that was issuing an Islamic facility in cooperation with a UAE-based player. So this is something that brings to me to say that Islamic finance can be. We in the general system of promoting Italian competitiveness also as a tool to support it. And yeah, this is from my side.
No, I think that is fantastic. All the challenges that you mentioned, I think are very pertinent because people don't realize, they think that implementing Islamic finance is a very straightforward thing in a new market, but you have to take into account, as you mentioned, the monetary policy, supervision, licensing, and so on. The double taxation has always been an issue. And as you said, markets like the UK and others have come up with a legislative framework on how to address that and create a level playing field for both Islamic institutions and the conventional banking institutions. But it's great to see that despite these challenges, there are transactions taking place. It shows that Islamic finance can operate in that framework. I'm very mindful of the time. We just have a very short time, but I would like to turn to each of the panelists to just basically ask you, if there was one initiative that you think is the most important thing that your institution should be looking at going forward for the promotion of Islamic finance, what would that be? What is the area of focus that you think that, whether it's, Bank Negara Malaysia, whether it's, Central Bank Philippines, Central Bank Italy, what is the main area of focus related to Islamic finance that you should be looking at going forward? And maybe Nurulza, we'll start with yourself.
Perhaps this is a reflection of the stage of development as to where we're at, but our main priority now is to ensure that the ecosystem gap of developing a system that is now at scale is fully addressed. And that includes expanding investable assets, making sure that takaful industry, the risk management tool, are keeping pace with market development. Thirdly, looking at the full potential of Sharia contracts and transactions, making sure that those value propositions that come with different types of contracts can actually be fully delivered in an efficient and competitive manner, optimizing digitalization and market developments that we see across the financial system as a whole.
Fantastic.
In the case of the Philippines, there's really low awareness and understanding of Islamic banking and finance. And I would consider increasing awareness and capacity building is very important to keep the momentum and develop further Islamic banking and finance in the Philippines.
I completely agree with you. Building awareness is key, and it's good to see the Asian Development Bank has done their report, and hopefully more thought leadership pieces to come as well. And Angela?
Yeah, but being a secular central bank, as I was saying before, we don't see a role in promoting Islamic finance, but we don't promote any market developments. But I see interesting following other regulators' developments and being open to market operators' requests and trying to understand what's going on. So that's our role in the general European framework.
Yeah. You always have to be market focused to be able to serve the consumers best.
Yeah.
On that note, ladies and gentlemen, we've run out of time. Please join me in thanking my fellow panelists for this great session. Thank you.
Thank you.